Um, Hi, I'm Tiffany White with Keller Williams Realty in the Nashville, Franklin, Tennessee office. I wanted to explore a little bit more about mortgages today. Now, I'm not a mortgage lender, I'm a realtor, but wanted to explore the concepts. So the numbers themselves are not really what's important. It's more so the concepts that I want you to help you understand how a mortgage works and the basics of what your payment is going to and how that payment, the parts of that payment change over time. So we explored in the last two videos and blogs, we explored the idea of perhaps buying a $250,000 home and putting 20% down. So that means we're financing right about $200,000. And so the principal and interest payment in this scenario was $1,074. Then we had taxes of about $100 per month and insurance, hazard insurance of $83. So that gave us a total monthly mortgage payment of $1,257. Now the exact numbers are really not what's important here. What I want to explain and want to help you to understand is how the parts of that mortgage payment change over time. Now I'm not really good at saying this, but it's called an amortization schedule. Ooh, I did it. Amortization. So it's a big word, but what does it mean? It breaks down how much of your payment is actually going to the principal, the interest, the taxes and insurance each month. Now the taxes and insurance, for the purposes of looking at a mortgage, like from, let's say we are getting a mortgage now that's going to start next month, the taxes and insurance are going to stay the same for all practical purposes. Now in reality, real estate taxes are going to go up over time, and insurance is going to go up over time too. So, but for the purposes of this example and the calculations when you're getting a mortgage, we're using what the taxes and insurance is going to be right now, and assuming that remains the same for the life of the mortgage, even though that's really not realistic, but it's the best information we have now. Now what's great about a fixed rate mortgage is the principal and interest part of your payment stays the same every month for the entire time. If you add the principal and interest together, in this case, it's going to be $1,074 every month. Now we're assuming a 30-year fixed rate loan at 5%. Now, honestly, 5% is a little bit high rates right now. If you have good credit, and especially if you're putting down 20%, that's a pretty strong financial position to be buying a house. And I realize some people may not have 20% down. I'm talking about the concepts, and I don't want to get too caught up in the numbers. But, okay, so what I have here is an amortization schedule. What's that again? From an app that I have on my phone called Mortgage Calculator. So I know that this is probably a little blurry, but I want you to see, and I'm going to hold it up to the camera now, is the green at the bottom is your principal. It's paying down like the balance of your loan. Then the yellow is the interest. So the green and the yellow, the principal and interest together stays the same. This is showing each year of your 30-year loan. Now the very first year is a little bit not in line with the others because it's only part of a year for 2018, and the very last year is not a whole year either. But the point is, if you look at this, the green in what you're paying on principal in the beginning is very low. What most of your principal and interest is actually going to interest. So if you look at this a few years down the line, the green is getting taller. You're paying more and more towards principal. And it's somewhere in the middle here that you're actually paying about the same in principal as you are in interest. So just wanted to kind of show you this to get you thinking. And then the red is showing your balance going down. So over that 30 years, you're actually paying off the loan. Most people don't stay in a house that long. It just depends. Some people do. So how would this change? Oh, okay, 2019. Like I said, 2018 is not a full year, but your principal, what you're paying in principal the first full year of your mortgage, which in this case would be 2019, would be $3,037 and some change. But let's look a few years down the road to 2022. Okay, it's about the same. The first several years, honestly, you're paying a lot of interest. But the longer you stay in your home, you can build up equity by paying down the principal, and then also just by your house appreciating. Over time, real estate generally does appreciate. No, it may not necessarily every year or every time period, but over history, in the long term, real estate is a really good investment. It's a really good place to help you build some wealth through equity and owning your own home. So let's see how this would change. Like I said, this is a 30-year fixed rate loan, but what if you were to get a 15-year fixed rate loan? Now the payment's going to be higher, but you're going to be paying more in principal and a little bit less in interest over the time of the mortgage compared to the 30-year. So this is an amortization schedule for a 15-year fixed rate loan, again at 5%. And honestly, if you were going to get a 15-year loan instead of 30-year, your rate is going to probably be a little bit better. But for just our purposes today in this example, we're going to assume that their interest rate is still 5%. It really doesn't matter the exact numbers. I'm just talking about the concepts and just want to show you how this works. So in this case, the principal, the first full year in your home, the principal that's paid off is going to be $9,459 and some change. So you can see you're paying a lot more in principal each year early on in this mortgage. So depending on, some folks might advise you to get a shorter term mortgage, like a 15-year. If your bank or mortgage company offers like a 20-year, that might be better than a 30-year mortgage. Now, the payment's going to be a whole lot higher. In this case, yeah, it's probably about $500 a month higher, and I realize that may not be possible. That paying 20% down may not be possible, but I just want you to understand these concepts. You can get a 30-year mortgage and pay extra, and you can pay it off and pay off more than this balance each year, more than what the general amortization schedule. If you were to pay each payment the way it is planned, what is the minimum due, this is what you're paying off. This is your balance that you're paying off, and you can see it go down. If you pay extra, let's say you go ahead and get a 30-year mortgage, because that's a payment you can qualify for and it's a more comfortable place for you to be. But let's say you're doing really well. Maybe you get a bonus. Maybe you get a raise. Maybe you sell some stuff. Who knows? You get some extra money and you want to pay it towards the principal. You can do that. You can make extra payments or pay an extra amount towards the principal and actually pay this down much, much faster. It's probably going to save you money on interest over time, and it's a very wise thing to do. So just wanted to kind of talk with you about how that principal and interest breaks down over time, because we were lumping them together in just one number, and wanted you to understand some of the choices. Again, the exact numbers don't matter so much in this particular example. It's really just the concepts I wanted to show you, and wanted to have a little prompt. So I'm very visual, and this really helps me to understand how things work, and I hope that's helpful to you. If you are looking to purchase a home or make a move, I'm glad to help. My name's Tiffany White. I'm with Keller Williams Realty in the Franklin, Nashville, Tennessee office. My cell phone is 615-260-5858, or my office phone, 615-778-1818. I'm glad to help. TiffanyWhite.com is my blog, and you'll find these videos and blogs there. And just let me know what I can do. If you have questions about mortgages, I can set you up with a great mortgage lender. And if you have questions about homes or about maybe what's available in our market right now, I'm glad to set up a search for you that would actually come directly from the multiple listing system, the MLS. It's going to be the most up-to-date and accurate information. Any of the public websites you might be looking at the very best, are a copy. Sometimes are delayed and sometimes even have wrong information. So just let me know how I can help, and I hope to see you soon. Thanks so much.